The Reserve Bank has stated once again, as they have a few times over the last week or so, that funding costs facing banks are significantly higher, and the Reserve Bank made that point again this morning in the minutes. And not just the cost of sourcing funds, but the Reserve Bank made the point that because of competition to attract all-important deposits for banks are having to pay higher deposit rates, and they haven't been able to reduce deposit rates in line with the cumulative half a percentage point cuts that we saw from November and December. So those things taken together, yes, the Reserve Bank agrees that funding costs are higher, and of course profit margins are being squeezed.
So I guess the only way we're going to resolve this is get Societe Generale versus one of the big four banks or the Bankers Association and get them to discuss this robustly against each other. But moving on to the RBA minutes themselves today and what they indicated about where interest rates are going to go, what were the major messages you got out of those minutes today?
Well, the Reserve Bank appears to be very comfortable about where underlying inflation is at the moment, sitting around about 2.5%, right between the 2 and 3% target zone. And the Reserve Bank made the point that while they saw the current cash rate setting at 4.25% as being appropriate at the moment, better news on inflation might give it scope to reduce the cash rate again. Now, whether or not that is in March, a few economists think that maybe there might be something in March, but they're standing alone. Most economists seem to think that the Reserve Bank will perhaps stay on the sidelines for a little while, wait and see the effect of those cuts in November and December, and perhaps cut once, maybe twice before the end of the year.